Hi, I'm Doug McKenzie and welcome to another episode of the Fintech Show. In this episode, we're deep diving into open banking, what it is, how it's going to develop, and how institutions are actually going to deal with the upcoming regulations. So first up, we sit down with Nationwide's Tony Prestedge to talk about the opportunities provided by open banking and the regulation PSD2. We also sit down with Crealogix to see how successful it's been in Europe so far.
The concept of open banking, where you own your own data and you have the right to share your data in whichever ecosystem you choose to bring about more value for you or improve services for yourself, will in many ways be more transformational to our industry than the internet and mobile banking has been thus far. Because whereas what internet and mobile banking has done is given you access to the services you could have accessed physically now through technology, what open banking does is completely empower you to use your data in a way that makes sense for you. Now, consumers, members will have to get comfortable with the security of that. And my view is that brands that people recognise and trust will win out. Secondly, there is a reality that really understanding what matters to you and how you might use your data in a way that helps you is something that we will learn over time. I was away last week, I had 6 young children. Well, do you know what, actually being able to know where they were when they were away on holiday, knowing what they were likely to spend and how they were likely to spend it was something that really mattered to me in a way that frankly 5 years ago wouldn't have done, and in 5 years time won't. But actually encouraging them to use data through services like Money Hub, where I could actually see what that expenditure looked like as a control freak father, empowered them and empowered me in that sense.
The way banks have structured their primary banking artifact, the bank account, they've made it so that they encourage you to spend as much money as you can, right? Get your airline miles, your cashback rewards, that's the focus on banks because that's how they've made money in the past. And what open banking is pushing is us to sort of reflect on the role banks have in society and whether that banking could be provided better by, say, a technology company like Ant Financial or Amazon, and also whether or not banks have your best interests at heart as a consumer. So at the heart of that, a bank account should be able to help you be financially healthy. And so open banking is really creating the emergence of these tools around financial well-being and contextual access to credit and things like that, there's been no onus on the banks previously to provide, and that's where the pressure is coming right now.
For me, this regulation is transformational. This is going to require organisations to create an entirely new channel based on API technologies so that information can be shared securely with registered and approved third parties. That means, in practical terms, that if a member of Nationwide chooses to share their current account information or their credit card information or enact payments via a separate third party, then they will be able to do that securely and with trust in that service across the whole industry.
How successful has it been in the UK in terms of open banking, allowing consumers to have access and have features available to them? Probably not as successful as it was hoped it would be, I would suggest. The reason for saying that, we carried out a survey recently at Crealogix, and we found that most people we surveyed hadn't even heard of open banking, didn't know what it meant. Because if you think about it, what does it mean, open banking? Consumers aren't really interested in that kind of terminology. What they're interested in is what it brings them. So having access to all of the accounts they have in a financial sense, available in one place. They want simplification. They want things to be easy to use and they want things to be available immediately. Also in the survey, what we found was that if we didn't refer to open banking per se, that everyone we surveyed was really keen on the features that are actually only available with open banking. So it's a bit of a contradiction in terms of what has been achieved.
With that in mind, we take a look at how open banking might continue to grow in the future and the potential for the regulation to be applied to further use cases in the coming years.
Ultimately, the question would be, what would you do with your banking data if you had it as a customer? And the answer to that right now is, well, there's not much you could do. You could start analysing the data, you could look for patterns in payments, or you could start to think about how you use your money. Most people are too lazy to do that. They want those answers provided for them. So the next question is, well, how does that data help you behaviorally in getting access to credit or getting access to insurance or services where if you traded that data, you'd get some benefit? And I think that's what gets quite interesting. So I think you'll start to see insurers say, hey, give us this data and we'll give you a discount on your life insurance or the health insurance, or like we've seen with the telematics data with driving for car insurance. But I also think that will start to play in terms of access to credit. So you'll start to see companies, maybe the tech players, offer maybe something like an Amazon Prime type service where give us the data and subscribe to us and we'll give you access to this range of services. Annual credit access like this, or without fees, or without punishing interest rates and things like that. So I think it'll be more about the value exchange that you can get from your data. So I don't think we're there yet. I think we're on that journey. But I think GDPR sort of forces this conscious decision to trade data, and I think in respect to what we've seen with the Facebook issues and so forth, I think that clarity or that transparency of that value exchange is quite good. But in the end, it becomes too clunky to do it like that. So ultimately, I think we'll probably end up that open banking and that sort of transparency will create two sets of data. Sort of core identity data and data, for example, about like your account balance, which actually becomes very important to keep secure. But other data, such as where you were when you made the purchase, behaviorally related data, aggregate information on the way you spend and where you buy stuff, that data will become more fungible and less, we won't be concerned as much about privacy on that, particularly if trading that data gives us some value.
I think there are many use cases that will come about. Again, referring to the survey that we carried out recently, certainly the respondents were interested in features that sound quite simple, such as, oh, I want to sweep, some money from this account at the end of the month into my savings pot so that I can work towards buying a car or a holiday. Now that sounds really simple, but behind the scenes, if you're a great big organisation in finance and you have legacy systems galore, then pulling together all those different forms of technology to create that functionality is very complex if you're trying to do that on your own as a bank. What we're able to do at Crealogix is to provide the orchestration between all of those legacy systems to which we are completely agnostic, draw the data through from them and deliver them forward in a way that a user experience is exactly what those users require. And we can do that by accessing just pure data from back office systems, but also by integrating with any third-party functionality to add additional functions at the same time.
The first job that we have to fix in banking, and it's becoming more acute, particularly in economies where you're seeing economic pressure. So in the US, where you see large-scale inequality, 1% capturing a lot of wealth, but you've got 72% of Americans, according to the Center for Financial Services Innovation, who can't afford a single financial shock annually. So we're talking about a $400 unexpected bill, a school fee or a dentist fee or a car accident. 72% of Americans can't absorb that. And in the UK, you've got similar sort of figures. So the first thing to do with open banking is start to look at the problem of financial health. Is say, let me get all of my data about all the money I'm spending and let me sort of figure out if there's a better way I could be utilizing my money. Is there activities that I'm doing that are putting me under financial pressure or constraints that if I behave differently would be available? So I think that's the first job of open banking, is actually to help people address their own financial well-being.
In the wake of open banking, a lot of the larger institutions have started collaborating with smaller, more specific companies to create targeted solutions. But just how important is collaboration going to be when moving forward?
For the second tier or 30 banks, it's a lifesaver and also a cost saver, because they don't have to do all the financial services for themselves, but they can hook up to third parties and they still are able to bundle these services for their clients. Otherwise, it would be way too expensive for a small size or mid-sized bank to do it. And thanks to open banking, thanks to the possibilities to cooperate with fintechs or with specialized market players, it is possible for anyone who wants to play in that market. And this is a big change because 10 years ago, it was only possible for the large banks to really do innovations because they had the money to do that.
So when we look at collaboration, I think the opportunity for collaboration exists beyond banking. I don't think the banks have responded particularly well to it, as I said, but I think you'll see consolidation in the banking space. So maybe that consolidation will occur around some sort of technology platform. You saw a merger announced in the US recently, BBT and SunTrust, and they claimed that that was about becoming more digitally focused with this bank that they built as a combined asset. I find that hard to believe when neither BB&T or SunTrust are particularly digital. So I think there'll be the approach to try and supplement what the banks can't do or can't do quickly with technology partnerships with other organizations that can give them access to data or access to platform. So we've seen Amazon do partnership with Chase, we've seen Goldman Sachs partner with Apple. Those are the big deals on the table. The real question sort of comes with the smaller deals, is how does a smaller community bank or a credit union or building society in the UK, for example, how do they stay relevant in this environment? You could say initially opening up access to a mobile wallet or some sort of financial health service, or and then ultimately maybe partner with fintechs, be the underlying bank or value store, deposit guarantee institution for a fintech. But there's only so many of these partnerships that you can realistically execute. In the meantime, the tech giants are still coming in, they're still deploying mobile payments architecture, et cetera, and so will increasingly take market share. So ultimately, you see a lot of consolidation in the banking. It's fairly inevitable. What we end up with is sort of a hybrid. You have some big banks that have survived, some big tech giants that have taken more broad sort of consumer experience stuff with money. And then fintechs that are specialized around certain things, the fintech unicorns, and this hybrid system or ecosystem that comes together based on all of that.
My personal view is that over the next 10 years or so, we will see the most radical transformation in financial services. So I'll try to bring that to life for you in simple terms. We've spent many, many decades being the single manufacturer of our products and distributor of our products. And the broader trends for digital and open data will start to see organisations operate in different spaces in that. So we will absolutely work hard to provide the best digital experiences and own that relationship. But some organisations, I don't think, will be in a position to do that in this future world, and therefore they will think about how they provide services in a different way, or they distribute others' products, or marketplaces become the thing.
When digitalisation first became a thing, when everyone was looking to bring in internet banking, for example, there was an immediate move by those retail banks to start to employ development teams and employ technology people to in-house this and grow something in-house that they could really deliver an innovation on the back of. But of course, what that meant is that as these teams have grown into bigger and bigger and bigger teams, and the banks now have huge development teams working in them, that what they're spending their time doing is fixing bugs, fixing problems, creating the same version of the same functionality, instead of continuously innovating. And that continuous innovation, I believe, can only be provided by working with a more agile, innovative organisation, such as Crealogix.
First generation online banking, everyone knows that because every bank offers online banking, is having account balances, doing transactions, seeing the last transactions, but that's just in a silo. And now the banks, they need an engagement platform where they onboard new clients, where they upsell or cross-sell for their clients, where they can offer them third-party digital services in their financial ecosystem, build up a platform for their clients. And this is totally new, and it needs a different type of technology. And that's exactly what the digital banking hub of Crealogix is doing. So you can, on one hand, use all what is possible in the open banking world. On the other hand, you can orchestrate it as much as you want, and all that in a seamless and secure way.
So, from the sound of things, it looks like the regulations are just getting started. And especially from the banks, we'll see how well they take it in the next couple of years. That's it from us. Thanks for watching, and be sure to join us on the next episode of the Fintech Show.